It's Wednesday, March 22nd, 2023. We have a lot to talk about today. I jotted down some notes. I printed up some articles. I'm going to recap what transpired in these markets earlier today. I would love to know your thoughts on this. Comment down below. What do you think about the rate hike that we got today? What do you think about the bank bailout? What do you think about the QE? What do you think about the U.S. economy right now? What are you seeing personally? What are your friends saying? What are family members saying? Where's this all going and how do you think it ends? Love to know your thoughts. Please comment down below. Before we start today, please give this video a thumbs up. Make sure you share all my videos and make sure you subscribe to this channel. Let's get right into it. I don't want to waste any time here. I don't want to drag this video out. First article, theeconomiccollapse.com. It's titled, "Are they actually trying to crash the economy on purpose?" Many of you, including myself, talked about this many months ago, that this would be a orchestrated, planned collapse. And it is beginning to look more and more like this is being purposely done. And as I've said in the past, this is why I make these videos and have reminded all of you to stay on track, keep preparing, that nobody's coming to the rescue, that the Fed is not coming to the rescue. And today we got another 25 basis point rate hike. And many people thought we wouldn't get a rate hike today. You knew we would. I knew we would. And it should have been 50. But there is no rescue coming. And there is going to be another rate hike, maybe a couple more. And it's not going to be enough, but it's going to hurt a lot of people, and it's going to hurt small banks. It says right here that there are 4,000 banks in the U.S. Hundreds of them could end up failing before this crisis is over. This would mean fewer mortgages for potential homeowners, fewer auto loans, credit cards, and debit cards. Our banks need to be healthy, or there is no flow of credit in the U.S. economy. And we're going to see a lot of banks crushed. I believe a lot of the smaller, medium banks, regional banks, are going to be crushed. Homeowners have lost trillions of dollars in equity, and the Fed is pouring fuel on the fire. We're watching handfuls of Walmart stores closing. We're seeing lots of stores closing, more Walgreens stores closing. They cannot make money because of the crime. Many stores closing because of the economy. People don't have the money to spend. Large companies are pulling uninsured money out of small and mid-sized banks all over America. And where's that money going? It's going to the big banks. It's going to the JP Morgans, the Wells Fargo, the Bank of Americas, the Citigroups, the big boys. So I think a lot of people have got to stop listening to the so-called experts, because they have been absolutely wrong and they have misguided people. Think about how many people are losing money in their homes, their 401ks, their retirements, their investments. And they're going to continue to lose money because they keep listening to the wrong people. I think if I could say one thing today, people really need to invest in themselves and really absorb as much knowledge and understand money. They need to understand where their money is. They need to understand more about how to invest their own money instead of trusting other people to invest their money, or they're going to keep losing money. There's a lot of counterparty risk out there when you trust other people with your money, especially banks. Many financial planners, financial advisors. Why do you not know where your money is or how to invest your own money? Maybe it's time to make the time to understand your money a little bit better, instead of allowing other people and trusting other people to make investments with your money. You need to know where your money is, what it's invested in, what it's doing. You need to take responsibility right now, because in my opinion, I would not be trusting anybody with my money other than myself. Let's talk about these markets today. Dow Jones down 530, NASDAQ down 190. Gold was up $32, silver up 70 cents. Everything pretty much in the red today except oil, gold, and silver. Stocks were absolutely crushed. And so while I was watching the Fed press conference today with Jerome Powell, very interesting, somewhat dovish, said a few hawkish things, but nothing really to move the needle. But he did say a few things. If we need to raise rates higher, we will. Okay, I believe him. The market is going to get it wrong if it expects rate cuts later this year, he said. So there are going to be no rate cuts in 2023. Another rate hike, maybe 2 more. I think that's going to put the Fed funds rate at about 5 to 5.25. How in the world is that going to get us back to 2%? Somebody please answer that. I don't see how that's going to beat inflation. So we're going to go 1, maybe 2 more rate hikes this year, and we'll be at around 5.25%. How is that going to beat inflation? I think the Fed has a long way to go here. What lies ahead for the economy may be uncertainty, Jerome Powell said. He also said that in regards to SVB, Silicon Valley Bank, he asked the question, how did this happen? How did this happen? Powell said that tighter credit conditions are likely. Banking system is sound and resilient. I don't believe that one bit. Didn't the Fed just pump $304 billion into this so-called sound and resilient banking system? Why, if it's so sound and resilient, did they just pump in $304 billion last week to boost liquidity? The Fed says that their target rate is 2%. How in the world is this possible? They talked about QT when they just did QE. I mean, where did the $304 billion come? They just expanded the balance sheet with more QE while they're talking about quantitative tightening. They're right back where they start. Remember that the Fed is $1 trillion in debt. They are absolutely broke. But we keep hearing about the tools. We have the tools to fix things. They have a printing press. They have digits on a screen. That's how they think they're going to fix this. Powell said that they are continuing to reduce the Fed's balance sheet. Again, they just added $304 billion to it. The Fed is $1 trillion in debt, as I just said. And this just absolutely blows me away. It just blows my mind that we're relying on the Fed, who is broke, to fix the problem that they caused. They caused this problem. 0% interest rates for a decade, buying mortgage-backed securities, injecting trillions of dollars into the market, creating market bubbles, creating a housing bubble, a bond bubble. They created this problem. Now they're broke, and people think they're going to be able to fix this. I think we are now at a point of no return. I think that things are so broken that they can't be fixed. They must collapse. They're going to collapse. It is impossible now for this thing to reverse course. It's going to collapse, ladies and gentlemen. It's going to get very, very ugly. Powell said that he doesn't blame fiscal policy. They can only control what they do. This is a big problem, and we've discussed this many times, that while the Fed's raising rates, the U.S. government is spending so much money that these rate hikes aren't doing a thing. And you know it, I know it, because every time we go to the store, anytime you pay for a service, the prices continue to go up. We're talking about a $6.7 trillion budget they're trying to pass right now. We're sending hundreds of billions of dollars to other countries. 25 basis point rate hikes just aren't going to cut it. They're just not going to cut it. A Fed's fund rate at 5.25% isn't going to cut it. The spending is outpacing what the Fed is doing, and it's creating more and more inflation. And then, of course, the $304 billion injection into these banks, do you think that that is not going to cause inflation? So while all this is going on, markets are kind of mixed, but they were going up at a point, and Janet Yellen comes out and makes some comments. She said that, and this is during Jerome Powell's press conference, she said that they're not considering a broad increase in deposit insurance. So all of a sudden we see regional banks absolutely take a dump here, absolutely hammered, and markets began to plunge right after Janet Yellen said that. So again, she said that they're not considering broad increase in deposit insurance. So people are freaking out in these small and medium banks. They're getting their money out and they're going to big banks. So, and the market freaked out. So here we go again. Here we go again. So how safe is your money? Probably not very safe. First Republic Bank down 15.9% today. PacWest down 17%. Zions down 6.7%. First Republic for the month is down 89.2%. and PacWest down 63.5% for the month. So right here in CNBC, regional bank shares fall as Fed persists with rate hikes despite industry turmoil, and of course what Janet Yellen just said. Here's one from the hedge today. JP Morgan, $1.1 trillion has exited the most vulnerable banks. And there's a list of about 190 banks in jeopardy on this list. And so we are seeing a lot of money pouring out of these smaller banks, and they're going to get crushed. We're going to see a lot of them crushed. And, you know, many people will talk about credit unions. Be leery of credit unions, ladies and gentlemen. They made a lot of bad car loans, and they're going to be on the hook for this too. And many of these banks made really bad car loans, and also really bad commercial loans. You see all this commercial real estate sitting vacant. Many of these banks are going to be on the hook for this, just like the bad car loans that they made, the bad RV loans that they made, the bad home loans that they made. Remember, 500,000 people that bought a house last year are already upside down. The hedge, interest payments on Treasury debt up 29% year over year. Revenues are down, especially individual income taxes, which reflect the slowing economy. The overall deficit is exploding. It's up 50%. If the current situation normalized and Treasury securities lose the flight to quality bid, interest rates are going to spike faster than one of Elon's rockets. That on the hedge today. Here's another one from the hedge. SEC hits Lindsay Lohan, Jake Paul, and Soulja Boy, and others with crypto fraud charges. Careful what you promote, ladies and gentlemen. You know, I watch a lot of these videos, and I watch people promote garbage all day long. And, you know, people should be held accountable. They should be held accountable for what they promote, because many of these people didn't even own this garbage. And they're just being paid so that you own it, so that you buy it. And there's a lot of people that make these videos and they promote a lot of garbage. They don't own any of the stuff that they promote either. They're just selling out to the highest bidder. So be very, very careful of who you listen to and what you're buying. These people have a lot of influence, and they got paid millions of dollars. And that reminds me of Kevin O'Leary, right, with FTX. A year prior, he said crypto was garbage. But then when FTX paid him $14-15 million to be a spokesperson, boy, he loved it, didn't he? So be careful of who you listen to. So next article, and the last one, I'll end with this one coming from CNBC. Coinbase warned by SEC of potential securities charges. Listen, charges are going to be coming very, very soon, it looks like, for Coinbase. And I just don't understand when we are seeing a flight to safety into gold, into silver, into some of the cryptos. And I just don't see something that is held on a digital screen protecting people when the lights go out, when people really need something physical. Going back to simplicity, I don't see how this is going to last. Look, you can buy all the crypto you want. You know me, if you don't hold it, you don't own it. I'm big on gold, silver, land, and being your own asset and having a skill set and things of that nature, food, water, etc. But how this can be an asset, I have no idea. Now, we see the markets get rocked today, and look what happened. Bitcoin earlier down over 1,200 points, trading with the markets. So, you know, if the lights go out, grids down, cyber attack, what good is crypto going to be? At least with gold and silver, you can physically hold it, get to it. Nobody knows where it's at. Nobody knows that you have it. It can't be tracked. It can't be hacked. And it's going to have real physical value. Again, if your computer doesn't work, if there's no energy source, what good is it? I think we're going to see a lot more people begin to figure this out. And here we go now with Coinbase. We've seen so many of these crypto exchanges, crypto banks. We've seen so much fraud, so much theft, and now Coinbase. They're probably more than likely 90% chance the charges are going to be coming very, very soon to Coinbase. But be careful with your money, ladies and gentlemen. Gold and silver has a 5,000-year history. Be as diversified as you can. Do whatever you want with your money, but I just have a hard time believing that something on a computer screen is going to be an asset to you, or a safe haven asset, when things really, really get bad. Because to me, people are going to go back to what's historically been there, what has a 5,000-year history, something that they can touch and feel, something that you can go anywhere in the world and people look at it and go, that's gold, that's silver, that's real money, that's God's money. And I know people are going to argue with me, but when you look at what the central banks are doing around the world, when you look at what the BRICS nations are doing, they are buying massive amounts of physical gold and silver. So everybody has free will here. Make your own choices where you think your money is the safest. I just don't think it's safe just having digital money, digits on a screen that you really cannot protect. I think we're at a time now where you better have something that you can get to quickly, that's physical, that you can touch, that people know what it is anywhere in the world, something that has a history, something that has simplicity. I'm going to leave it there today. We'll see what the markets do tomorrow. Maybe we'll see a miracle and they'll rebound. But where's the good news going to come from? Things are breaking, ladies and gentlemen. There's something very, very wrong here. The system is melting down right before our very eyes, without a doubt. You can tell, you can feel in your gut that something's wrong here. And you know, when these people come out and tell you that things are safe and sound, nothing to worry about, the banks are fine, we're pumping in, you know, hundreds of billions of dollars, nothing to worry about here, nothing to see here, you know, we got you covered, don't worry. That's when you better begin to worry. And I'm worrying quite a bit because they're coming out more and more trying to calm everybody down. Something is going on behind the scenes here. Something is very, very wrong. And we'll see what happens tomorrow. But we are getting very, very close to the greatest depression the world has ever seen. And I hope every one of you is preparing for it. God bless. Walk close to God. Take time. Make some sacrifices, ladies and gentlemen. Whatever you have to do to prepare for you and your family. God bless.